Good afternoon. I'm Dan Fitzpatrick here at stockmarketmentor.com, and before we get into the chart of the day, I want to let you know that on Wednesday I'm going to be hosting an intraday strategy session for members at noon Eastern time. That's 9 o'clock Pacific time, and what we're going to be doing is we're going to be going over the market. I'll be talking about some specific stocks, but mainly this will be a chance for me to answer members' questions during the day. What stocks are you looking at? What do you need help on? It's typically a great opportunity to interact with members. And so we'll see how this works. And if it works well, then by golly, we may do it more often. And I want you there. If you are not a member, then all you need to do is go to the membership page, which we'll take you to at the end of this video, and sign up for a free trial. It doesn't cost you any money to sign up. You can cancel within the first 30 days and you're good to go. And then the best thing is I get to see you at the webinar on Wednesday. So I want you to get that done as soon as we finish going through this chart. Let's take a look at Priceline today. Now, on the last chart of the day, which was, I believe, over the weekend here for you guys, I looked at Priceline, noting that the stock was moving higher. It was on a breakout. Okay, that's great. So what the heck do we do with it? You look at the daily chart, and if you're a short-term trader, this kind of move, let's see if I can slide it back a day. There we go. This kind of move, you can't ignore the fact that the stock's right up at resistance. So, okay, great. We got a breakout. Do you really want to buy a stock, though, that's up this high? Sure, it could keep on going, and as we know, it did. But it's really a risky buy. Not to say that risk doesn't pay off. Typically, the only reason people take high risk is because they're looking for high rewards. If you're not looking for high rewards, then why take the risk? But my point on this was that while the daily chart looked pretty good, shows a volatility expansion, in my view, the real analysis here is on the weekly chart. You can see this nice little bull that Priceline's been carving out for a while. It's going back, over a year. But this is really what I'm seeing. Let's do a real easy, quick, measured move. Okay, I'm going to say, just because I have a hard time with math, I'll use round numbers. Let's say the base here is at 550 bucks of this bull pattern here. 550 bucks. We're going to say the breakout was 775. That would have been just today. So what's the difference between these two prices? Well, that would be $225. So we add the depth of this base to 775, and what do we get? Well, magically, we get $1,000. And so my bet is that over the next, and this could take a while, it ain't going to happen tomorrow, it's not going to happen 3 weeks from tomorrow, but my bet is that over the next, we'll say several months or even a year, you're going to see Priceline continue this little breakout and ultimately test 1,000. That's the way I'm going to be trading it, and that is my price target. So now you know my long-term view of it, and so I'm going to go back to the daily chart, and I'll say here, if that's my long-term view, then do you really think I care if Priceline comes down to 750 or so? No, I would actually look at that as an opportunity to add more. Over at Option Market Mentor, we've got a similar trade going on ConocoPhillips here, where the weekly chart was really the prevailing chart, and we're up, I believe we've got a negative cost basis, meaning we've actually gotten paid for buying some January 6250 calls by just trading around that position using higher priced options. But that's for another day and another venue. But the bottom line is this: if you've got a short-term mindset, then fine, here's your chart. Maybe even the 15-minute chart, set your stop somewhere around there if you are a short-term trader. That's not my deal on this. This is a big anaconda. Any stock price that sells for 777 bucks is either Berkshire Hathaway on a real deep discount or a stock like Priceline or Google. And in those instances, I like to use the weekly chart because I think you're going to make more money. Okay, that's it for today. I'm going to take you to the sign-up page so you can get onto our risk-free trial. And then as soon as you sign up, you're going to get a link so that you can enroll in the website on Wednesday. Okay, I want to see you there. Good evening. Dan Fitzpatrick here at StockMarketMentor.com on Tuesday, May 14th. And in this video, I'm going to look at one of the stocks, one of the few that did not go up today, and that's Solarcity. Yesterday's hot stock was today's rock. But let's talk about this for a second. So the company announced earnings, and the stock traded down pretty much right away. After market last night and into today. But here's a little day trading thought. Look at, you can see here, by the way, I wouldn't go long this with anybody's money except the money of somebody I didn't like very much. The stock has really just kind of been rinsed out here. There's been just a big flush of stockholders now. So the path of least resistance, and by the way, the company's losing money. So a lot of them are in this sector, but the path of least resistance in my view is either sideways or down, but it's going to be tough for Solarcity to climb through this. But here's something that you got to look at. We're going to start with the 5-minute chart here. Okay, you can see how the stock rallied yesterday, a pretty strong move from 30 bucks up to almost $40, 30% in a day, not too shabby. But look what happened today. Okay, in fact, I'm going to go, I'll go to a 1-minute chart in a second. This is what you got to know about trading these rocket ships here. Okay, the stock closed right about here. Volume was actually pretty thin. It was not the kind of volume that we saw earlier in the day here. So there was a lot of volume here. But still, resistance on a stock that gaps down after earnings is typically right about at the level where the stock closed at the prior day. And it's not just those folks like I talk about a lot about just wanting their money back. They just want to get their money back. Well, a lot of folks, bought up here. They want their money back too. But yesterday's close is kind of a magnet for stocks that have gapped either up or down. They just got to kind of test them. So if you were long this stock yesterday, wouldn't you be looking to, you see how the stock just absolutely got pummeled at the open. Let's say you didn't sell at the open. You were the one that didn't, the smart one that didn't. Wouldn't you, once the stock started getting up to where it closed yesterday, think, you know what, I got to close my trade. Even though I bought at a higher level, I tolerated the move down during the rest of the day, but I'm not going to wait for the stock to move higher. I just want my money back. And so you'll see this kind of trade take place where the stock moves up. Yes, it moved up above it, but we're not talking like eye surgery here. We're trading with a chainsaw. The stock comes up, moves through resistance a bit, and then sold off the rest of the day. Now, anybody who was trading this stock pretty much all day, you were missing a heck of a run in other stocks. What tends to happen to a lot of folks who fancy themselves or try to be day traders is you get so fixated on one stock that you forget about the rest of the market. If you're a savvy day trader, the real trade here was shorting this stock, and you made some pretty good money. If you held it all day, trade around it, whatever you're going to do, you make some pretty good money here. But the market was generally moving higher. So if you're short this stock, even though you made money on it, when the market is so strong, the river is flowing north, don't you think it would be better to swim north as well? In other words, get on stocks that are moving in sync with the market. Because if equities were selling off today, let's say Mark Tepper came on CNBC this morning. It's amazing how one guy other than Ben Bernanke can move the markets like he did. But let's say he came on CNBC today and said that he thought stocks were in a bubble and you definitely needed to get out. Can you imagine what Solarcity would have looked like today? I mean, this thing would have gone down another $5-6, my bet is. So you're trading this stock, you're shorting it, and you're still, in my view, losing money because of missed opportunities in other areas. But let's go down to the 1-minute chart because I want to show you really how to not get shaken out of a stock that you happen to be wrong at on the open. This was a perfect example of a gap in reverse. The first minute was pretty hectic. A lot of selling right at the open, because that's what people do. They got to get out of the stock before everybody else does. What they don't realize is that, yeah, they're the first ones at the door, but they're also selling for the lowest price. So you see this stock trade up. This was really your trade right here. If you were smart and you were actually buying, I'm not going to say smart, let's just say you were watching this and you had some experience, and you were actually buying this stock while everybody else was selling, you actually had a pretty easy trade on a 1 minute chart if you're just following the intraday lows. Excuse me, the intra-period lows from 1 minute. Each low was higher than the next until you got to this one. So if you're long the stock, let's say you bought the stock right here on the breakout, you could have set a stop. I mean, this would be kind of a no-brainer, easy trade. You could have set a stop below each prior minute's intraday low, bought here on the breakout, gotten stopped out right here, and that would have been a good trade. You're out within the first 6 or 7 minutes of the market, and that's that. My point for making this video is just to emphasize that a lot of times the obvious trade is the exact wrong trade to make, and that was double the fun here. The obvious trade for those who were long the stock was to sell the stock because, oh my gosh, everybody's selling it. Well, that's not the time to sell it. The not so obvious trade to a lot of people was to buy the stock. That's why you tend to make money. The obvious trade after the stock had kind of settled out over the last, over the first 15, 20, 30 minutes, the obvious trade was to short the stock. I will say no. The obvious trade was to find another ticker. This trade was over. So anyway, that's it for this video. I hope this helps you with some of your intraday price moves. Members, a lot of our stocks are working really well. Who knew? The market's strong. All of these stocks that we've been covering are strong too, so let's get over there and check them out.